gapping lower this morning. We've already bounced over $1 from the pre-market low. You kind of see last couple of weeks between this 270.50, 274, and with the gap down this morning, it sets us up to kind of test recent support. Does it become resistance? And so in this area right here, we fail here and then do a retest of the pre-market low. This pre-market low is right around a gap fill. It would actually be good if we could hit that. It would be a gap fill from May 8th, which was here. So we gapped up the next morning. We never filled it on the 9th. We tried in the morning, even in the afternoon, but we didn't quite get there. Oops, sorry. It's this gap right here. So here's the close. And then the next day we gapped up here. We came down to 270 a few days later, but we never quite filled this gap. We did in the pre-market. So right here around 4:30, I guess that's the London Open. So right at the London Open, we had filled the gap on the SPYs. Now about $1.15 above that level. So my thought was to try the short on the SPYs into this area here, or to fade on the long side on a move below 270, and we'll go from there. I think the burden's still on the sellers in my mind to show that they can hold it below this range from the last couple of weeks. The last big move in the market was to the upside after the sell-off to 260. So the sellers have to prove that they can hold below this range from the last couple of weeks. So after 10:30, 11
Haynes
o'clock,
International, HAYN.
after 10:30, 11 o'clock, if we're above 271.25, good chance we can work our way back up into kind of the middle of this range from last week. Let's take a look at IWM, see if that looks any different. IWM was down at 160 at the London Open. If we go back to Thursday's price action, it was pretty wild in the morning. Came off to 160.50 or so. That had been the all-time high before we took that out a week or two ago. So I guess the way I would look at this is 161 to 161.25. That's where I'd look for some resistance on IWM. Right here. You can see this was much more of an uptrend than IWM breaking out in the SPYs, which have been sideways for the last couple of weeks. And then it kind of moved back inside, I guess below 162 here. So the way I would look at it is resistance, bigger picture resistance now is around 161.80 to 162. A close above there would be interesting. And a close below 160 would also catch my attention. And I would buy into that pre-market low as well until pull into 160. All right, ZTO. So ZTO's got a 10% equity investment from Alibaba. The stock had already been going up. Normally trades about 2.5 million shares a day. So it's been kind of slowly grinding higher from 16 to 18. And that started to accelerate. Not sure if there was some news or people knew that this investment was coming. But it's gone from 18 to 19.25 last couple of days. So, for $16 stock, 16 to 19 is a pretty big move. It's about 20% move to 19.20. And then it gets this investment. It stopped at 23 in the pre-market. My inclination is to short it. So they've already been running up ahead of the investment. Actually, when this ticked up here, I had offered it up at I offered it a little bit too high. I was up here 22.80. Figured I'd short it against 23, see how it behaved there, and then see if it comes all the way back down to this area here. So right now, the sellers are starting to take a little bit of control, but it's still, in the scheme of things, it's still obviously, now the sellers are actually starting to come in a little bit here. Anyway, any type of spike on these are really coming off well. All right, so it's 21.50 now. So any type of spike into the 22s, mid 22s here now, I'll start to short a little bit lower, or even a failure right on the open above 22 and gets back down below 22. Play it for move down to here. And then kind of see. It's done 760,000 shares in the pre-market, so that's about, what is that, 30% of a little bit over 30% of the daily volume. So it's going to be really liquid. Yeah, so that's why it's first. I don't even think I've ever traded the stock before. It IPO'd. IPO'd here about a year and a half ago, a year and 8 months ago. It was an $18 stock, went down to 12. And this gap up this morning on the Alibaba investment has the hallmarks of a short-term top. The only thing that would keep it from being a short-term top is if people think this investment somehow makes it more likely for them to get taken over. So, all right, let's move on. Spend enough time on that. So Momo, on the other hand, this looks like something to me where it should hold the gap and be very strong. Here's the daily. We're on a conference call right now. So Momo had topped out up here at 46.80. And it gapped down from 43.5 to 40.50. So it's coming into this. It's coming into this area right now in the pre-market. But if you looked at the numbers, obviously their earnings per share percentage beat was, I think it was over 50%. But you always want to check and see how the revenues look there. Make sure there's no accounting shenanigans. The revenues beat by over 9%, I believe, and they guided up over 10. So it's very bullish. Let's see, where has it been recently? So at the beginning of the month, it was $35. There's people buying it between 35 and 37. I always want to think about, how are people positioned coming into the numbers? Like, it's just on the numbers and the guidance, the stock should hold the gap and just keep on being bought all day. I just want to make sure not too many people are interested in taking profits. So it was at 40 late March, a couple months ago. I don't think that's the case. There's definitely some people in here between 34, 36 who could see this and be like, wow, this is worth taking profits up here, $43, $44. There was enough people buying it in the high 30s. I don't think want to push it. So my thought process is it has a pretty good shot at holding above this gap fill here. And you can just actually wait and see if it actually does consolidate above 43.50. And then in the afternoon, play it for move to 45, 46. Unless it does something crazy right on the open. So it's already shown the ability to get above 44 in the pre-market. So, I mean, ideally, flush down on the open, something like this. Then play goes back up to 43.50. See how it behaves there. Does it actually stay up in this area, hold above 43? And then start to consolidate above it, above 43.50. and then play for a move to 45, 46. So right now the sellers are in control in the pre-market. It failed here, 44.40. It's made a lower high at 43.50. So this is really good information in the sense that if it ends up supporting here and you get that quick move on the open above and it holds here, then you can play the move to pre-market high. See how much it gets above there. Maybe it takes out the pre-market high and comes in and holds, makes a higher low. And then just play it for that all-time, what if the all-time high is 46.80, but we'll play it to 45 and then kind of see how it behaves up at 45. If we get a consolidation in that 45 area after 10 a.m. And it breaks to the upside, then you would think about the all-time high. Normally trades 3 million shares, has already done 1 million in the pre-market. So we're looking at, could easily trade 10 million shares today, should be very liquid. And by the way, just because my initial, I should point out, didn't I put on the sheet? I think the short interest is 85%. So, I mean, my God, you want to talk about good earnings, good guidance, massive short interest. Like, why wouldn't it just go crazy on the open? But it's got to get above this 43.50 first, and then go from there. And if you buy on the momentum above 43.50, I really wouldn't hit out of it unless it got back down below 43. You're playing it for, it has $2, $2 to $2.50 of upside from there to the all-time high. PBR. So I haven't traded this stock in years. It's the Brazilian oil company. Here's the daily. So it had already gapped down last week, and now it's gapping down another $1.50. It did have a big up move. So just so you can put this in perspective, into the financial crisis, it went from like 40 to like 75 and then back down to 20. And then bounced back up to $50 before trending down with oil for a few years. And as oil bottomed, it started to make a comeback. So if we look at it, it's gapping below 12 today into this prior high, the high from November of last year. I guess it's already bounced a little bit off of this 1085. This would be the first spot where I'd look to see if it had some trouble. But it's just because it's come off so much so quickly. That's, I don't really have much more edge beyond that. There could be a little bit of bottom fishing going on today. And obviously, if it catches a bit quickly and goes up straight on the open, you probably could fade that as well. Foot Locker, FL. So this one, I talked about this on the weekly review over the weekend. For those of you who didn't catch it, should be uploaded. I thought it was a pretty good review because we talked about some fundamental trading topics as well. This was one I was able to actually get the low print right on the open based on the level I put in the pre-market game plan. So that worked out pretty good. It did fail at pre-market resistance initially, and then at a tight consolidation just below it, and then started to hold above, and eventually did move up, had a second leg from there. So, but there was this trade to here, and then once it got above this opening resistance, there was a trade to pre-market resistance, and then there was a second trade in the afternoon, kind of this tight consolidation. If you wanted to get long above this blue line here, it was one little shakeout though. But I think somebody put in the chat when I was doing the review over the weekend that it did stay above VWAP as it was moving higher, which made it kind of easy to stay long it. Looking at it today, I think when we talked about it last week, we talked about 58 to 60. I think was longer term kind of resistance. So if there was a little bit of a drop out on the open into this area here, this is where I'd be looking to buy it for a move back up to Friday's high. And then, of course, if it takes out Friday's high and holds above there, 57.5, 58, what you would be looking for on the upside. GPS, we talked about below $30. Could maybe work its way back down to 28. It already did that. I feel like some of these retailers that have been doing pretty well fundamentally and have made some big up moves, when they've been getting hit on that first day of earnings or even a little bit on the second day, they've then come back. So really the question is that going to follow this pattern? So Gap, it bottomed down in the teens, then held in the low 20s here, then we held at 25. So it's been working its way back slowly but surely, and it's now coming into this longer term support. It did close at the low, so we want to see if it can kind of hold below that 28 and you play for a follow through. But I would say this: if it gets below 28 and you're shorted and you capture 40, 50 cents on it, I'd be pretty careful about holding that short. And then also I would look if it does a reversal and gets back above, let's say 28 and a quarter, similar to, KSS a couple of weeks ago, which had the big down and then it's really slowly but surely grinded its way back. I would look for this one to start to grind its way back, back up to $29.5, $30. So that's something for you to think about in terms of the price action. And then SPLK, this one ended up doing what initially I thought it could do. It just did it in a not easy trading way. I shorted it on the open, I think between maybe 115.5 or something like that. And again, this is for more experienced traders because you're risking $1 to $2 trading it. And so on the open, I shorted it up here. It came off the quick $3 and covered most of it. And then it came back up to the opening high, and it looked like maybe it would fail there at 116. You see these two wicks, but then it took it out. And so I got stopped out. And I don't think I was around when it reversed and consolidated down here, but it did eventually fail 116, came down hard and consolidated. This was kind of, if you really wanted to play it for a move back down to 110, afterward you had this downtrend start, you got your consolidation here, and they were selling it at 114.16, you had your break to the downside. This is kind of your conservative signal to get involved below 114, and it did end up coming all the way back down to almost 110 before buyers stepped in again. But I think looking at it, kind of how it closed, if you wanted to get involved on the short side today, this is kind of the area here into here. End of the day failure area, afternoon support was 112. That becomes resistance. And then if you're going to be shorting into this, you want to play it for move initially down to 110, but really down to 108. I'll take a look at a TRXC. So this one back in the fall went up to $5. It looks like it already coming into this FDA announcement had already run up from 2 to 350. So this could be a sell the news situation. Yeah, I mean, unless it takes out the pre-market high, I think it's a sell the news situation. And 350 is the first support.
Hope you enjoyed that video. You can actually watch that video if you're subscribed to our Trader 90 before the market even opens. What stocks are in play? What levels in those stocks are important? And how we might go about attacking that stock. That's Steve Spencer, 20-year veteran trader, laying it out there every morning before the market even opens. A really, really powerful tool to start your session off on the right foot. So right now we're offering a trial that you can take advantage of to access this meeting and other meetings throughout the day. We have a meeting at 11 a.m. Eastern where you can sit down with Mike Bellafiore and listen to him talk about what's going on during the morning session, what stocks were in play, what the best trade opportunities were, as well as maybe some things that we're looking at heading into the afternoon session. So I really encourage you to take advantage of that trial.